Now we have Rakesh Verma, co-founder and chairman, managing director at MapmyIndia, Rucha is with me to talk about a lot more on the company and the management.
Thanks for that, Malika, and thank you for joining us on the show, Mr. Verma. My first question to you will be around the earnings, but yes, before that, let me give our viewers some highlight of what kind of numbers did the company report. Well, revenue was up around 14%, but margin came down at 36.1% versus 44.5% same time last year. PAT was also down 8.3%, and as we speak right now, the stock is taking a big hit, down about 7.5% in trade today, and is down since the start. But Mr. Verma, back to you. Can you tell us more about what led to the disappointment? As we can see, yes, of course, the margins are down, but some kind of lining over there would be great.
Thank you for inviting me today. Well, I don't know why the market is disappointed, but let me help the market understand us better. Three big things we have done in the Q2. Number one, we have formed a joint venture with Hyundai Autoever, a Hyundai company. We have increased our downloads of the consumer app called Mappls app from 10 million to almost 30 million. And we have worked quite aggressively on the drone. These are the three things we had talked about a year back that MapmyIndia will be investing. Since the expense is spent on all these three goes as an expense item and not as a capex, and hence you are seeing a drop in the PAT or EBITDA both. But if you look at the simple consumer part of it, the expenses on the cloud and the advertisement, which has helped us reach where we are at 30 million downloads, itself it contributes to almost 5%. So in a way, EBITDA could have been easily something of the order of 42%.
Right, get that. Okay, let's start with what kind of guidance in terms of an annual basis are you looking forward to? Because as we look at last quarter's transcript, well, you had mentioned about crossing 1,000 crore in the top line by FY 27-28, and if I look at the FY 24 top line, it's around 380 to 400 crore rupees. So, do you still stick to the 1,000 crore milestone? And if yes, how can that be achieved?
Absolutely. There is no change in that. We will reach 1,000 crore definitely in FY 28, if not earlier 27. And for that, our open order book today itself is almost like last year was 1,300 crores. So we are pretty confident about reaching that number.
Okay, and what segment do you see the traction coming from? The map-led or the IoT-led?
Interesting. See, the map-led itself is going on and increasing both and really provides the big EBITDA margin. The other one, the IoT-led, the EBITDA has substantially increased from I think 7% to 14%. So if IoT-led business definitely will contribute a good number towards the revenue growth, and what we are making sure that it should also provide a reasonably good EBITDA.
Okay, so no, Mr. Verma, coming back to my question, from where largely will the 1,000 crore revenue be driven from? Map-led or IoT-led, or it's a mix of both?
It's a mix of both, but still the map-led will be the dominant player.
Okay, map-led will be the dominant player, but when we look at the EBITDA margin performance of the map-led segment, well, it has come down from 56% same time last year to 46%. So do you think this margin will pick up now, or do you still see some kind of sluggishness in the second half and going on for FY 26 as well?
What you see 54 to 46 is primarily due to Mappls app investment that we are making to get more consumers today, which will lead to a much better business for the Map-led in the future.
Okay, and When will you expect this margin to improve in the map-led segment is what my question is.
The map-led margin itself is pretty decent. It's definitely 54%. So the question of increasing the margin is not the issue. The issue is how much do we keep spending on the consumer map, which we believe is very important and critical for overall business of the company.
Okay, sure, Mr. Verma. Okay, let's move on to what kind of order book is there in your pipeline. Can you just give us a kind of a range, and you know, clients looking forward to getting more orders? How is the order pipeline looking like?
Well, beginning of the year, we started with 1,300 odd crores. It's going to only increase during this year. We do not disclose every quarter the new order booking, but this 1,300 crore will definitely be will be up to somewhere at the end of this year.
Right, sure. Okay, fine. In your press release, you had mentioned that the map-led margins was largely impacted by consumer business and technical outsourcing. So is that related to the Mappers app which you were talking about earlier?
Yes, the Mapples app related are the two activities. One is the advertisement marketing, and the other is the use of the cloud platform. And since Map app at this point of time is all free and it will remain free. But in going forward in the future, the moment we cross a certain limit of beyond 30 million, the other revenue like advertisement on Mapple's app and everything will kick in. So that's our long-term or medium-term growth plan.
Okay, okay. You'd also mentioned about the consumer tech and the enterprise digital transformation space facing challenges in terms of the overall market. So, by when do you think will this, you know, be normalized going forward?
It will do definitely quite good in H2 because of the way orders are booked, and those orders are going to be executed in H2 time, more likely in the Q4.
Consumer tech space likely to pick up in the second half, and what about automotive and mobility tech? Healthy growth over here, 27% on a YOY basis. Do you expect this one also to register a similar kind of growth in the second half?
Well, the way we look at it is both A&M on one side and C&E on the other side. They are contributing 50% revenue year after year, and that trend we definitely see will continue in the near future.
Sure. All right. I have a lot of questions, but because of crunch of time, this one will be the last one from my side. Well, can you talk to us more about the JV which you have entered into with Hyundai? What kind of top line or the bottom line addition can we expect, and within what time frame?
Okay. Hyundai Autoever and MapmyIndia entering into a joint venture primarily with a 40% stake of MapmyIndia and 60% stake of Hyundai. It will be an associate company, and hence only the profit part of the joint venture will be added to MapmyIndia profit. The other one is the joint venture will lean on MapmyIndia for the mapping part of it for the Southeast Asian countries. And that's where the direct revenue will happen. Thirdly, most of the automotive companies whom we serve in India already, almost all of them, they definitely will become our customer for the Southeast Asia, because the way we look at joint venture is looking at is joint venture will provide the best quality maps for Southeast Asia.
Well, Mr. Verma, this is Mallika. I'm afraid that's all the time we had on this edition of the show for you. But thank you so much, and we wish you all the very best.
Thank you.